welcome to ET Now Hangouts with me, Ankita Saxena. Well, in today's show, in our first segment, we are discussing a very important topic of investing that has garnered a lot of interest from the new age investors who believe in the power of tech and AI, quant or quantitative investment. Now, well, in India alone, the total AUM of domestic quant funds rose nearly 180 times in 5 years between 2018 to 2022. Well, with this rise in the investor interest, we will decode quant investing with Sonam Srivastava, who is the founder and CEO of Wright Research, which is recognized by Forbes as the top emerging startup with Retail Robotics Advisory of over 600 crores and PMS of over 150 crores in AUM. Hi Sonam, welcome to ET Now Hangouts. It's a pleasure to have you on the show.
Thanks a lot for having me.
Sonam, tell me, you are an IIT graduate. In fact, you're a chemical engineer. What drew you to this world of investing? What got you into starting your own PMS? And specifically, what got you interested in quantitative or quant investing?
No, I think it's been a very interesting journey for me. Like you said, I'm a chemical engineer, but what we're seeing in IITs is a lot of kids are actually interested in algorithms and data. So I was one of those kids. I used to love to play with data, and after I graduated, I experimented a little bit, got my first job at Reliance, and then tried tech for a while. Then I did my CFA and all. I realized quant is something I really loved. I got my first job here in Bombay in 2012 with Forbes Capital, which is a quant-based company here in India, and that got me very interested. I just found my calling with it.
Right. So, Sonam, let's start from the beginning. We have a young audience that watches this show. So, your PMS leverages AI and machine learning to make investment decisions. So, tell our young viewers from the basics, what is quant or quantitative investing, and how is it different from traditional form of investing?
No, definitely. I think that's a very interesting question. And see, I'll give you an analogy, right?
Yeah.
See, let's say, you're making food, you're creating, you're a chef, so you do your experimentation and you make a dish. But then after a fair bit of trial and error, you create a recipe, right?
Right.
And that recipe becomes like a consistent thing that you can follow along.
Right.
Similarly, with investing, a traditional investor would play around with what they're seeing in the market. Yeah. But once they have, identified what they want to do, they'll create a recipe, which is a quantitative algorithm. And see, investing being data-driven, you have a lot more to play with. You have historical data and factors and scenarios, all through data that you can sort of optimize, use AI and all that, and create something which can be more consistent, right? Because there's just one system. It's obviously complex,
right?
But it will follow along the same recipe and end up being more consistent, right?
So I have a couple of questions related to what you just said, but my first question would be, you said quantitative investing uses AI, mathematics, algo, for decision making. Does that mean it completely rules out human intervention?
No, not really, not in the sense that we do it. See, so there's a lot of roles that we have to play in designing that system. And whatever we make is not foolproof, right? So somewhere or the other we realize, okay, we're not looking at this data point, or this thing needs to be constrained. So for example, recently we had a lot of PSU stocks, and then PSUs got a little volatile. So we realized that we have to limit that exposure, right? Okay. So we would learn things and optimize it. So there is a lot of human intervention, validation and checking that goes into the system. But we use a system because we want to be much more objective in the decision making, right? We don't want a subjective ad hoc bias. We want to be objective.
Not the human intuition bias. You want to remove that from the system.
So we want the system to have a good enough understanding in how it is picking tailwind, how it is shifting allocation. It's an active strategy. It's not simple, but yeah, we try to remove the human intervention for sure.
Sonam, so you mentioned, there's a set recipe. Now the recipe has been made and now AI has to follow what has been set. AI or machine learning has to follow it. But what happens during the non-linear periods of stock when, because of few bad quarters, the stock may not be performing, while a human fund manager would show more conviction, probably because there is some value in the stock. I'm sure the AI does not pick up that, right? Because, fund manager has a liberty of going and meeting the management, going to the plant, but that's not something that quant-based investing uses, right?
No, so quant-based investing uses a lot of data points, right? So I'm just not looking at the price. I'm looking at some of the fundamentals, and I'm actually looking at estimates, right? So all of these smart analysts, they put out their EPS estimates and revenue estimates. So we source that data. So we have a comprehensive set of data, something to evaluate value, something to evaluate trends, something to evaluate, even estimates. And we are looking at these different forces that can be nonlinear.
Right.
And combining all of these, right, I think the system would be, probably might not stick with the same stock if it's going through a couple of bad quarters.
Right.
The system
So does that decision lie in your hands, like in human hands, if I may call it that?
No, not really. So we try not to intervene.
Okay.
See, it's been a 5-year journey. We have tried to intervene and it doesn't work really well for us. We follow the system, but see, let's say there's a red flag event that comes up, which let's say the system is not recognizing. Let's assume there is a something happens with the company which is a big red flag. So that is the time when we might go a step in and intervene. Otherwise, with a short-term correction and anything, we do not intervene.
Right. So Sonam, the whole mutual fund industry, it works for one thing, and that is outperformance. Now, there are 4 things that a fund manager really looks at towards achieving outperformance, and that is what to buy, when to buy, how much to buy, and when to sell. In terms of AI or quant-based investing, how does that happen? What are the processes in place?
Right. So, see, the system is designed to replicate a human fund manager's decision making, right? So, from how to invest. So, let's say, I think investing based on trends or investing based on value is a good strategy, right? So, we would be defining these indicators to the stocks, and we would get the stocks ranked in a certain criteria. So the moment the stock is ranking high, it comes into the system. It's ranking low, it goes out of the system. But along with that ranking, you want to make sure that your portfolio is diversified, right? So you're making sure that you're creating a basket that has a mix of different industries and sectors. So we use optimization methodologies to create that basket. How much to invest? Again, there are different optimization methods that will help you govern how much to go into different stocks. And then finally, exiting something is again coming out when the stock goes out from that ranking methodology, right? So it's all set in the process. We have different risk checks in place. We're looking at the risk in the market also, on modulating how to take, how much risk to take in the strategy, right?
Right. Also, as a quant-based investor, what are the parameters that you use? I mean, is it that different quant-based fund uses different parameters? And if that is so, then what are your parameters? What is your gauge of a good stock?
No. So I think our approach is that we want to try to understand all the major forces in the market, right? So I will not say that I am biased towards value. I will not say that I'm biased towards quality
or momentum.
So we do look at momentum a lot.
I know. Your fund looks at momentum a lot.
We do look at momentum a lot, but that is because momentum works really well in India, right?
Okay.
So it's not a mandate that let's only do momentum, but momentum works really well, so it gets a lot of weight. But there are periods when momentum does not work that well, and quality stocks start getting a higher allocation. There are periods when nothing works, so we add a little bit of gold, some cash in the strategy, right? So we do all that, but see, primarily we are looking at a whole set of factors, right? And just because of the performance, momentum ends up getting more allocation.
Okay. Also, Sonam, I'm sure there are other quant funds as well. So they would also be using parameters. Those parameters could be same. So according to algo, it will throw up the same results, the same stocks, right? So what is the differentiator there, within different funds?
Right. So see, I think everybody would have a different definition of that factor. See, funds that are just following the Nifty index, right? They will all have the same stock. But active managers like us might be looking at different criteria. So, momentum can be looked at using a moving average or a technical indicator, or through some other ratios. So everybody would have a different definition. So we typically see that we are correlated with some of the other managers, right, who might be using the same philosophies, but we are not exactly similar. So there could be some overlap, but being active, we end up combining multiple forces and being a little bit differentiated.
Okay, but sooner or later, like ChatGPT and AI has taken over everything. It'll probably start throwing up stocks as well. The stocks that you should be buying. What is going to be the role of a quant fund manager then?
No, see, Ankita, I really believe that quantitative research has been there longer than ChatGPT. ChatGPT is like a large language model.
It's an example of an AI tool. It could be anything.
So see, I think different sort of AI would work in the stock market. The large language model that ChatGPT uses, it's learned the whole language. It's a very comprehensive sort of brute force approach. So I think there are other approaches that would specifically work in the stock market. We also do experiments. We try to find if there is a machine which knows nothing, can it beat us? Sometimes we get positive returns, but see, we don't use a totally something which is not backed by any human intuition, because it's real money. You don't want to take that amount of risk in it. But yeah, I think a lot of progress is happening. We want to participate in all that, right? So we use something like ChatGPT to understand sentiment in the market, extract news from, information from news. So this is a lot of things that will be done, and I hope it doesn't take my job very soon.
I think it's going to take away all of our jobs sooner or later. But on a serious note, quant versus human intervention, how is this going to work? How much of a human intervention will quant-based investing use or uses, or eventually what is going to be the future of quant investing?
So Ankita, I think, my approach has always been data-driven, right? I've never done anything which is not data-driven in all of my life. So, even if, let's say, we are doing a simple thing, right, where, we have to pick up a stock based on some simple thing like value, I would go back, look at the statistics of value and try to find what's the best way to do value, right? So, so that type of intuition backed by statistics is what we use, and I think that has an advantage, right? Being data-driven, being backed by a lot of research has its advantage. So therefore, I think quant might do better than human intuition, but then there are a lot of smart people out there, right?
Right. Also, having said that, there are a lot of people who have their biases towards, human managed funds versus quant managed funds. Give us a sense of the age demographics, your client set in terms of age, in terms of are the more tech savvy people more inclined towards quant investing? How do the, seasoned investors perceive quantitative investment? What is your sense?
See, I think I end up talking to some of the smartest people.
Absolutely.
Right? To think about myself, right? Let's say I have to take a decision about anything. Let's say I'm going to a marketing agency, I would talk to the guy who's giving me more data-driven numbers, right? So I think that is what the sort of shift is happening, right? People are looking at more objective and data-driven solutions in across everything. So we are getting a lot of clients who like that instead of stories. And it's not just that the tech people are coming. We have a lot of tech people from Google and all of those places, but we have a lot of smart and seasoned investors, right, who are looking at differentiated products, who think that, the things that we're talking about, which are very objective, they make sense to them. So, a very good mix of very smart people. So, we're just enjoying talking to these guys.
Right. Also, Sonam, you mentioned, you run a PMS and you also have a Smallcase. Now, for our young investors, a PMS is slightly, it's slightly far-fetched, because you need at least minimum of 50 lakhs of investment in a PMS. But what is a Smallcase? For the benefit of our young investors, tell us, what is Smallcase investing?
So, Smallcase is like a basket investing. It is, a portfolio-based approach where we are telling you these are a set of stocks to buy, when to sell them, when to add another. Regular rebalancing is being done. It's totally digital. You can start with as low as 30,000, 40,000 rupees, and it's literally one-touch solution. And it also is a little bit DIY, right? So all this philosophy that I'm talking about, you get to see it in action. You can do a click to invest and see how the stocks are being changed. So a lot of people actually love it.
So suppose if I want to get a Smallcase portfolio done with you, like I'm investing 50,000 rupees with you, I buy a Smallcase portfolio. How does it work? Do I see my portfolio, and how does the churn happen?
You see the whole portfolio, you have to approve so you just do a OK to approve the trade, everything is traded in your demat account. Now let's say...
and there is a chance that I may not approve it also. Is that, I can do
so
that?
Then you can edit it, you can customize it. Sometimes people miss the rebalancing, also that happens. But on a periodic level, let's say after a month, we'll send you an update. Okay, these two stocks need to get out, these two stocks are coming in, we'll give you a rationale why we are doing this. And then you just apply and go along with it. If you want to edit anything,
so I do the rebalancing myself.
You have to do OK to do it.
Okay.
But you get a whole picture, right? What's happening.
Right. Also, Sonam, that was very insightful. Thank you so much for this conversation. But we won't just let you go like that. We'll play a quick rapid fire round. Quant-based investing outperform human intervention or human-based funds?
I think so.
Your favorite book on investment?
So I really like this book on Jim Simons, which was The Man Who Solved the Market, which talked about his journey on how he became a...
Okay. Your favorite fund manager?
So again, I really love reading the book about Parag Parikh, and a lot of people love the approach, so I really look up to them.
Okay, one investment advice to our young viewers?
I think, you guys need to experiment more, start early, play around with what's out there. I think learning and getting that experience, right? It matters a lot.
Okay. What is that one mistake that Gen Z is making in their investment journey, according to you?
See, I think a lot of people don't go out and see what's out there. Even when I was young, right, I didn't know what all options were out there.
Yeah.
There are even very simple options, right, like find an index fund, find a mutual fund,
Right.
which will give you much better return than doing nothing. So just go out, see what's out there, and you'll find something very interesting. And I think this whole field is so interesting that you'll find your interest.
Value investing or momentum investing?
See, I have to say momentum investing. Because,
Right.
Yeah.
All right, Sonam, thank you so much for joining us today. It was a very insightful conversation. Thank you so much.
Thanks a lot, Ankita.
And well, with that, it's time for us to slip into a short break. You don't go anywhere. We'll be right back. And well, with that, it's a wrap on this edition of ET Now Hangouts. I'll see you next week, same time. See you soon.
If you like this video, then like, share and subscribe to ET Now.